Hello and welcome to the AmeriCorps Internal Controls for Grant Recipients presentation. My name is Caitlin and I am part of the team with AmeriCorps Office of the Chief Risk Officer. An essential component of effective grants management is ensuring the presence and utilization of internal controls. Effective and efficient internal controls are essential to assuring the accomplishment of organizational goals and objectives. This training will cover key internal control concepts such as: what are internal controls? Why does my organization need internal controls? Who are the responsible parties for implementing controls? What are the components of internal controls? And finally, the elements of an effective internal controls system. Internal control is a process used by management to help an entity achieve its objectives. Internal control helps an entity run its operations efficiently and effectively, report reliable information, and comply with applicable laws and regulations. More simply put, internal controls are your policies and procedures that are used to ensure risks are minimized and objectives are achieved. Examples of internal controls include segregation of duties, authorization procedures, and documentation and records retention. Why are internal controls important? As mentioned, internal controls work to minimize organizational risk. Risk is any adverse factor that may affect the normal operation of the business or an action that threatens an organization's ability to achieve its goals. Organizational risk can take many forms. Organizational risks can include misreporting financial statements, missing reporting timelines, noncompliance with required grant regulations, or could be as significant as fraud, waste, or abuse. In addition to minimizing risk, internal controls work to ensure your organization's goals and objectives are met. They help your organization move forward. Internal controls also allow your organization to demonstrate good stewardship of grant funds. This is of particular importance with federal funding, as we are entrusted with utilizing taxpayer dollars appropriately. Why do we need an effective internal controls system? From the previous slide, the answer seems apparent. Internal controls protect our organization from risk and help our organization meet its objective. As grantees, it is always important to be able to demonstrate not only the impact of the organization's programming and services, but to also show that the organization can demonstrate they are good stewards of funds, especially federal funds. While this is true, the reason we must have an internal control system is because it's the law. The U.S. Office of Management and Budget, as authorized by 2 CFR 202.303, requires grantees to establish and maintain effective controls over the federal award that provides reasonable assurance that the non-federal entity is managing the federal award in compliance with federal statutes, regulations, and the terms and conditions of the federal award. Your internal controls must be in compliance with guidance in Standards for Internal Controls in the Federal Government, issued by the Comptroller General of the United States through the Government Accountability Office, or the Internal Control Integrated Framework, issued by the Committee of Sponsoring Organizations of the Treadway Commission. Who is responsible for internal controls? The short answer is everyone. Internal controls are a shared responsibility. All staff within an organization have a responsibility for internal controls. While every organization is different, your internal controls are going to be established by your organization's oversight body, board of directors, or senior management. It is this entity that will create the tone at the top and set the stage for successful implementation of proper internal controls. They are responsible for establishing key performance standards and policies and procedures, as well as communicating these expectations to staff. Managers and supervisors are responsible for executing and managing the policies, procedures, and business activities and ensuring they are being followed by staff. Finally, entry and mid-level staff will be responsible for documenting, maintaining, and properly executing business activities on a daily basis. Let's take timekeeping as an example. Your organization's oversight body establishes a time and effort policy. Managers and supervisors will ensure staff are aware of the policy, provide guidance on processes related to reporting time and effort, and approve submitted time cards, while staff will complete and submit timely and accurate time cards. It is important to note that the presence of internal control system is not just for a large organization. Regardless of your organization's size, you must have internal controls. When developing internal controls, the controls developed should reflect the structure of your organization. So now that we understand what internal controls are, why organizations must establish them, and who is responsible for this work, the next piece is exploring what makes up an effective internal control system. As listed on the slide, you can see there are 5 fundamental components of an internal control system. These components were established by the Committee of Sponsoring Organizations, COSO for short. The framework was created to serve as a set of guiding principles for establishing and managing internal controls in a business environment. As mentioned previously, your internal controls must be consistent with COSO's Internal Control Integrated Framework or the Government Accountability Office's, GAO for short, Green Book guidance. We have included additional information and resources related to COSO and GAO at the end of the presentation on the resources slide. The 5 components of the framework are control environment, risk assessment, control activities, information and communication, and monitoring. For an internal control system to be effective, each of the 5 components and relevant principles must be present, functioning, and operating together in an integrated manner. We do want to note that the outlined framework is what we are striving to achieve when establishing internal controls within an organization. Developing and implementing effective internal controls takes time and resources. So if your organization or program isn't quite here yet, maybe you are just getting started in the development phase or you're in the process of expanding your internal control systems, this too is okay. The key is that you are taking proactive steps to build upon what you have. As part of our training, we are going to cover control environment, control activities, and monitoring. The starting point of any internal control system is the control environment. The control environment is the underpinning of the other core components and is the foundation internal controls are built on. So what is a control environment? The control environment, which has also been described as the tone at the top, includes management's integrity and ethical values, management's philosophy and operating style, and the oversight provided by the board of directors or senior management. It incorporates the organizational structure, lines of reporting, and the assignment of appropriate authorities and decision-making responsibilities within the organization. And it identifies how individuals will be held accountable for their actions. Control activities are the policies, procedures, and mechanisms in place that reduce risk. In other words, control activities are actions taken to minimize risk. Standard control activities include written policies and procedures, for example, your NSCHC policies or your timekeeping policies. The segregation of incompatible duties, for example, different people should be responsible for each stage of cash handling, including receiving, depositing, recording, and reconciling. The review, authorization, and approval authority of transactions. Safeguards over access to and use of assets and records. This means you store valuable assets like cash and sensitive documents in secure locations. You don't share your user IDs and passwords, things like that. Regarding documentation, the maintenance of grant transaction documents is important, such as travel meal reimbursement forms, rental agreements, contract files. The design and use of documents to record and track transactions, such as purchase orders, is also important. Other activities include the reconciliation of documents or reports, such as your mileage and travel reimbursement forms, your purchase orders, timesheets, and finally, there should be an accurate and effective accounting information system that includes the summarization of data and the availability of reports. An essential control activity is the presence of written policies and procedures. Policies being the rules we are expected to abide by, and procedures being the operational processes required to implement the policy. Policies and procedures are an essential part of any organization. Together, policies and procedures provide a roadmap for day-to-day operations. They ensure compliance with laws and regulations, give guidance for decision-making, and streamline internal processes, and they also define and shape the culture of your organization. As we review the key elements of written policies and procedures, it is important to note that policies and procedures should continually evolve. They not only need to grow with your organization, but they also need to reflect ever-changing federal, state, and local regulations. So as you are developing your policies, you will also want to create an accompanying document that outlines when policies should be reviewed and those responsible for the review and revisions. As noted earlier in the training, developing and communicating policies, in most cases, is going to fall to your oversight body, senior leadership, board of directors, etc. However, no policy should be created in a vacuum. When creating a policy, it should be shared with staff from different units or departments. This allows you to identify gaps in the policy or conflicts with other existing policies or implementation challenges. Another point worth noting is that it is not enough to just have written policies and procedures. You must ensure your organization's established policies and procedures are being followed. An organization's control environment will play a key role in the control activity. By establishing an ethical climate and setting clear expectations of staff, you are promoting adherence to the organization's policies and procedures. So, as you and your organization are developing or revising policies, it is important to understand the components that go into effective policy and procedures. Your organization's policies, procedures, and processes should address the mission, key goals, objectives, and responsibility for each unit or office. As with any goal or objective that is set, you need to ensure that they are measurable and achievable. Another key element is creating clear job descriptions for employees within the organization with established lines of authority and responsibility documented in policy and procedure manuals. Finally, you will want to ensure that your guidance covers standards of performance and authority for the following activities as they are applicable to your organization. Review and approval, reconciliation process, asset security, segregation of duties and responsibilities, authorization and approval, documentation retention, and finally, grant program monitoring. Here are some examples of policies your organization may need as it relates to grants management. These are time, effort, and attendance, national service criminal history check, travel, compensation, and benefits. Do ensure your policies are updated according to your organization's current practice and updated to reflect ever-changing federal, state, and local regulations. Let's take the elements of an effective policy and procedures and apply them to timekeeping. This is just an example walkthrough, so please keep that in mind. Your timekeeping policies and procedures do not have to match this example. An organization's policies and procedures can vary, but must be compliant with 2 CFR 200-430. Supporting staff's time and effort is a key component in determining how costs are allocated, so having timekeeping policies and procedures is essential. In this scenario, your objective is to ensure timely and accurate reporting of staff time and effort across all funding streams. In creating the timekeeping policy, your organization reviews 2 CFR 200.430 compensation. Personnel services review what regulations are required of your organization. Based on this review, again, for example, your organization's human resources establishes a policy requiring all staff to complete bi-weekly timesheets detailing daily time and effort on each project worked on. All time and effort reporting must be recorded and submitted in the organization's timekeeping system. Then, every other Friday, all staff are required to submit their bi-weekly timesheet through the time management system. Staff will enter actual hours worked on each project, as well as any non-work hours, such as leave or holiday pay. The staff's immediate supervisor reviews, validates, and submits to accounting for final review and payroll processing. Another key component of the process should include monitoring for compliance with the established policy and procedures. An example of monitoring, for example, timekeeping situation would be that every quarter Human Resources conducts a review of 20% of all department timesheets to ensure the timekeeping policy and procedures were followed. As mentioned previously, creating segregation of duties is identified as a key element in creating effective internal controls. Segregation of duties is ensuring that no one person is in control of an entire process or is not in control of multiple steps in a process that are incompatible duties. The purpose of segregation of duties is to prevent errors and inappropriate actions such as fraud. This is a good time to mention that regardless of your organization's size, segregation of incompatible duties is essential. So while you may be the only staff within your program, there is always someone or an entity supporting you. This could be a board of directors, an executive director, a bookkeeper, etc. It is important to develop segregation of duties that reflect your organization structure. As you create and/or revise your organization's segregation of duties, it is important to ensure the following. Ensure that there is a system of adequate checks and balances for accounting, human resources, and information technology. Adequate checks and balances means that no one person, unit, or department would be able to control too much power. A single employee should not have control over a singular business activity from beginning to end. All units should work to separate functional responsibilities to ensure that errors, intentional or unintentional, cannot be made without being discovered by another person. Moreover, a single staff person should not perform more than one of the responsibilities of authorizing, approving, recording, and reconciling transactions. Segregation of duties helps protect your organization against waste, fraud, and abuse. Without segregation of duties, your organization exposes itself to increased risks and does not have an effective system of internal control. Here is an example of segregation of duties, the purchase of office supplies. In this example, we have 4 different individuals involved in the process of buying, approving, paying, and recording a program expense. And these individuals are also not all in the same unit or department. The staff and program manager and the accountant and bookkeeper are in different units. So we can reasonably say that no one entity has too much control over the process. The staff member submits the invoice and documents necessity of the purchase for the program. The program manager reviews and approves the program expense. The accountant processes the payment, and the bookkeeper records the expense in the general ledger. Segregation of duties helps protect your organization against bad actors. Without segregation of duties, your organization exposes itself to increased risks. Let's take a look at another example, payroll processing. What if you are a small organization and you don't have multiple departments to share key functions with? How can you set up effective internal controls? First, ask yourself the following. Do the same employees responsible for preparing payroll for processing also perform any of the following duties? Approving the payroll, generating payroll checks, distributing payroll checks, or receiving final payroll reports for review and approval. Then, look at ways to enhance controls over the payroll process. This could include using staff not involved in the creation of payroll processing to review the payroll file, using an outside payroll service provider, using direct deposit instead of payroll checks, or performing periodic review of payroll expenses to include budget to actual. Please note, if an outside payroll service is used for payroll processing, the same employee responsible for communicating changes to payroll master file data to the outside payroll service provider should not be involved in recording the payroll entries in the general ledger, preparing payroll reconciliations, or distributing payroll checks. This employee should also not receive the copies of the final payroll reports from the outside payroll service. Authorization and approval are internal control activities that mitigate the risk of inappropriate transactions or actions. They serve as fraud deterrents and enforce segregation of duties. Authorization is the signing off for the organization to make a decision or take an action. The individual authorizing has the responsibility of reviewing along with authorization. For example, the CFO reviews the supporting documentation and authorizes the payment of purchase of a new software. A good internal controls practice is to implement a multi-level review process. This aligns with our prior internal control activity of having segregation of duties. A second set of eyes makes a huge difference when executing grant expenditure activities. Thus, the authorizer and the approver should generally be 2 separate people. Grantee policies and procedures should clearly identify which employees have authority to review and approve different types of transactions based on staff's job and position and responsibilities. Approval authority should correspond with the job duties and responsibilities of the employee. Employees should review supporting documentation for transactions being approved to ensure that the expense is reasonable, allocable, allowable, and valid in accordance with the terms and conditions of the grant. It is key to understand the internal control impact of your signature. Think about the transactions that you authorize or approve. Make sure that you are satisfied as to the validity and accuracy of the transaction before signing. A couple of examples. A travel voucher is submitted by an employee and then is approved by the supervisor and submitted to the accounting office for correct expense allocation. Service hours are submitted by volunteers, and then the supervisor reviews and certifies that the hours were performed and recalculates the number of hours for accuracy. Without clearly outlined authorization and approval processes, your organization exposes itself to increased risk, such as incorrect or improper transactions being charged to the grant. Here is an example of implementing effective internal controls regarding time card approval and pay for a smaller nonprofit with 4 staff members with a separate Human Resources department. Human Resources creates a comprehensive policy that outlines responsibilities for submitting time cards, collecting timesheets, reviewing timesheets, signing off on timesheets, and putting hours into an accounting system, and printing and signing checks. Employee completes and validates that timesheets are true and accurate, then submits the timesheets to their manager for approval. The manager collects, reviews, and approves timesheets. The accountant reviews timesheets for completion, enters hours into the accounting system, and prints the checks. Finally, the CFO signs the checks. Records must be adequately maintained in a safe, secure place for easy access when needed for future audits or reviews. In this next example, for a small nonprofit with one staff and a board, segregation of duties is very limited, but still possible. In this example, the board creates the policy, then the employee authorizes timesheets, enters hours into the accounting system, and prints checks. Board member 1, who may be a chairperson, collects, reviews, and approves timesheets, and then board member 2, who may be a treasurer, approves pay by signing checks. In this scenario, records still must be adequately maintained in a safe, secure place for easy access when needed for future audits or reviews. Even with a very small nonprofit, a comprehensive policy must still be developed that outlines the responsibility of employees for submitting time cards, as well as who will collect timesheets, who will review timesheets, who will sign off on timesheets, and who will enter hours into the accounting system, as well as who will print and sign checks. Another key element in creating an effective internal control system is to ensure safeguards over access to and use of assets and records. In the highly digital world we live in, it is important to not only think of the physical assets, but also all the various records and personal information your organization maintains electronically. You will need to assess whether your organization has the appropriate safeguards in place. As a grantee, you are entrusted with physical assets and personal information, and you will need to ensure these items are appropriately safeguarded. You can ensure effective safeguards of assets and records by securing and restricting access to equipment and grant system applications to reduce the risk of loss or unauthorized use. Depending on the item, whether it's physical or electronic, securing assets and records will look different. Maybe this means old paper-based records are in a locked room and electronic files are password protected, prohibited from editing, printing, or copying. You should also be sure to always securely send information. You should only send PII via secure methods. Standard email is not safe, and you would want someone to take the same care with your PII. Make sure that only those who need the information are provided access, and that access to assets and records is reviewed and adjusted as staff leave or move into different positions. For example, if you are an organization that doesn't have an organization control email address, such as Hotmail or Google email addresses for staff, you should look at how these email addresses are deactivated when the staff member leaves the organization. You should also perform periodic physical inventories to verify existence, quantities, location, condition, and utilization of physical assets, including IT equipment and property. As mentioned previously, without proper safeguards in place, your organization is exposed to increased risk, such as the misappropriation of assets, such as cash, inventory, and equipment, unauthorized access to critical grant management information systems, or the unauthorized access to personal identifying information, such as social security numbers, addresses, and dates of birth. Documentation is a necessary part of an effective internal control system. Documentation in the lens of internal controls speaks to how you are documenting your internal control system. It is not enough to have documentation of your control activities, but you also need all aspects of a transaction or activity, such as who performed the transaction or activity, who approved it, what action was taken, etc. This documentation allows you to demonstrate your control activities were performed, your policies and procedures were followed, and that you followed the appropriate rules and regulations. I'm sure you have all heard the famous phrase, if it is not documented, it didn't happen. It is the cardinal rule in grants management, especially expenses paid with federal funding. So, what do you need to document? Within your organization's guiding documents, there should be documentation procedures specifying what decisions require supporting documentation and detailing the processes and procedures for recording an activity. You also find additional information within your award terms and conditions regarding what documentation needs to be maintained and for how long. Be sure to ensure your information system has a place to maintain adequate documentation. Again, remembering to ensure the information is secure and only authorized individuals have access. You as grant recipients are responsible for ensuring that transactions are accurately recorded and retained in accordance with retention period establishing procedures. Moreover, you are responsible for knowing what the documentation requirements are for your federal award and how long the information needs to be maintained. For the Code of Federal Regulations, 2 CFR 200.334, financial records, supporting documents, statistical records, and all other non-federal entity awards pertinent to a federal award must be retained for a period of 3 years from the date of submission of the final expenditure report. For example, your program's progress reports and federal financial reports must be supported by adequate documentation. It is just not enough to say we served 1,000 students or spent $50,000 of federal funds. There must be documentation to support this information. Another important factor to keep in mind is documentation should be contemporaneous with the decisions that are made. For example, if I am charged with AmeriCorps member NSCHC review and eligibility decisions, the date I review and adjudicate should be the date I sign off on eligibility. Do not post-date documentation, as post-dating documentation may be considered fraud. Misplaced or missing documentation could result in your expenses being questioned. You must know your award documentation requirements. This is a must. Even after your award ends, there are documentation requirements. Make sure you are keeping your grant documentation for the required period. Here are some examples of typical documentation you should keep when maintaining your grant awards. As it relates to eligibility documentation, AmeriCorps state and national grantees will need to ensure they have documentation that supports a member is eligible to serve. So that means not only reviewing the member's eligibility documentation, but also maintaining documents that support the individual is eligible. So have a copy of the passport for citizenship purposes, a driver's license to demonstrate proof of age, etc. The same applies to our AmeriCorps senior programs. Ensure you have maintained documentation supporting things such as a volunteer's income eligibility, their proof of age, and that you have national service criminal history check documentation. Regarding timesheet and timekeeping, this applies to staff members and volunteers receiving salary, fringe, member, and volunteer stipends. You will want to ensure that you are keeping the correct timekeeping records to support the expense charged to the grant. Moreover, you will need to ensure that you have a timekeeping policy that addresses staff timekeeping expectations and other nuances of your programs. For example, how do you track excess or fundraising time and effort for staff, as this is an unallowable activity and cannot be charged to the grant. For non-personnel expenses, make sure you have adequate documentation of the expense. Proof of costs would include items such as a utility bill, your office lease, or your rental agreement. Proof of payment can include your bank statement demonstrating the utility bill was paid, cleared checks, or ACH payments. Reconciliation is the process of comparing transactions and activities to supporting documentation. Furthermore, reconciliation involves resolving any discrepancies that may have been discovered. The reconciliation process is considered a detective internal control measure, as reconciliations are looking back at transactions and activities that have occurred. Depending on the transaction or activity type, the frequency of reconciliations will vary. For example, every quarter, your organization reviews all travel reimbursements to ensure source documentation, such as the travel request form, the approval form, and the travel purpose, as well as the amount charged, reconcile to the quarterly financial report. Reconciliation is the process ensuring transactions and activities are properly recorded, accurate, complete, allowable, and necessary to carry out the functions of the grant. Your organization's guidance should clearly outline what activities require reconciliation, the frequency of such reconciliations, and the staff responsible for conducting the reconciliation and resolving errors. Reconciliation processes are most effective when they are consistent and thorough. Employees involved in the reconciliation process should be knowledgeable and clear on their responsibilities and expectations. Additionally, it should be clear to an external reviewer when a reconciliation has been completed. Document reconciliations clearly to verify that a review has occurred, when it was done, and who was responsible for the review. The benefits of reconciliation include ensuring that coding is accurate and correct fund sources are charged through a multi-level review process, encouraging segregation of duties as a best practice, and supporting the modification or correction of errors in a prompt manner, such as unintentional calculation errors, miscoded expenses, or duplicate payments. Here's an example as it relates to timekeeping. All employees who are paid in full or in part with federal funds must keep specific documents to demonstrate the amount of time they spent on grant activities. Again, this is just an example of an organization that is using budget estimates for regular payroll and is reflecting actual time on the award through time certifications. Your organization should follow your established policies and procedures for timekeeping. Budget estimates or other distribution percentages determined before the services are performed do not qualify as support for charges to federal awards, but may be used for interim accounting purposes, provided that the system for establishing the estimates produces reasonable approximations of the activity actually performed. All employees whose work is partially funded by multiple grant awards must complete a quarterly personnel action form that reflects an after-the-fact distribution of the actual activity, not a budget estimate, accounts for the total activities for which the employee is compensated, coincides with pay periods under the period of certification, and is signed by the employee. The employee's supervisor certifies that the time reported accurately reflects the time spent on the different activities. The accounting office then reviews the personnel action forms after they are certified by the employee and supervisor and makes any necessary adjustments to match the actual distribution of time recorded on the quarterly certification documents. Internal controls over the accounting systems are necessary to ensure timely and accurate financial reporting so organizations can make appropriate decisions and annual financial reports to taxpayers are correctly stated. Maintain an accounting system that can adequately record, maintain, process, summarize, and report all grant transactions and reports in compliance with 2 CFR 200 federal award requirements. Your organization will want to ensure all revenues and expenditures are sufficiently documented, accurately and completely recorded, charged the proper accounting period, and properly classified. Be sure to ensure the proper segregation of duties or mitigating controls in place between transaction processing, authorization, custody, and the recording functions. Your accounting system provides a system of record for grantees' financial activities. Without an effective accounting system, your organization exposes itself to increased risk. For example, record and information systems provide unreliable reports for external and internal stakeholders, leaving you unable to provide support of activities. Specifically for AmeriCorps grantees, can your accounting system identify and separate different federal awards, different AmeriCorps grants, if you have multiple grants such as FGP versus an SEP grant, as well as separate match versus federal funds? And here are some questions to ask of your accounting information system. Are we able to get timely information? Are we able to get accurate information? Does our accounting system capture the information we need for reporting? And finally, are we able to generate reports with the necessary level of detail? Another fundamental component of an effective internal control system is monitoring. Monitoring helps determine whether internal controls are adequately designed, properly executed, and effective at any given point in time. Unmonitored controls tend to deteriorate over time. Your organization should develop guidance related to monitoring activities. The guidance should speak to the frequency, scope, and those responsible for carrying out the monitoring activities. In addition to this, any deficiencies identified as part of monitoring activities should be remediated on a timely basis to include the documentation of the resolution. When monitoring is designed and implemented appropriately, organizations benefit because they are more likely to identify and correct internal control problems on a timely basis, produce more accurate and reliable information for use in decision-making, prepare accurate and timely financial statements, and be in a position to provide periodic certifications or assertions on the effectiveness of internal controls. Internal controls are your policies and procedures that are used to ensure risks are minimized and objectives are achieved. Federal awardees are required to establish and maintain effective internal control over the federal award. All staff within an organization have a responsibility for internal controls. All organizations' internal controls will look different but should follow written policies and procedures. Finally, it is vital to monitor your internal control environment to ensure controls are being implemented consistently and are obtaining the intended objectives. Finally, here is a list of resources that can be used to learn more about internal controls. Highlights include the COSO Integrated Framework Principles, which is a resource that provides the key activities under each of the 5 internal controls components. The segregation of duties is a resource that was developed by AmeriCorps. Grantees can use this template and modify it to their organization structure. We also recommend looking at Financial Management 2 CFR 200.302, which addresses the financial management systems and controls non-federal entities should have in place. Grantees can also take a look at the AmeriCorps Office of Monitoring package and use that to do a crosswalk against the program requirements and their policies and procedures. Finally, we recommend the fraud awareness training for AmeriCorps grantees. While this training from AmeriCorps specifically focuses on fraud, as we have talked throughout this training, strong internal controls safeguard an agency from bad actors. This course covers best practices in fraud prevention, emphasizing the importance of strong internal controls.